Hello everyone, this is Swaraj and today we are going to learn about the sector rotation and we will also cover the topics such as how economic cycle influence the stock market, how different sector perform throughout the economic cycle, and we will also cover outperforming sectors during the economic growth and during an economic recession. And we will also learn to identify leading stocks and laggard stocks. So let's get started. Economic cycle. Economy cycle is when the economy moves from recovery to growth, then recession, and then to depression, and then back to recovery. Okay, so this is the economy cycle, and economy cycle is one of the most influential force in the stock market. Okay, and economy cycle is significant because it plays a very large role in determining the corporate profits, which are probably the most important factor that influence the stock price. Okay, with and here where the things get complicated because different economy cycle impact different sectors. Okay, and stock market sector are sensitive to different stages of the economy cycle, and to simply put it, some sectors may outperform when the economy is growing while some may outperform when the economy is in a recession. Okay, so this varying in the performance is something that investors refer to as sector rotation. Okay, so sector rotation is driven by investors buying and selling different securities during the economic cycle. Let's look at some examples how sector typically performs throughout the economic cycle. So suppose that economy is emerging from a recession and it is in a recovery phase. Okay, so where would the investors first put their money in? So it would be the financial sector. Why? Because when the economy is emerging from a recession, usually the interest rates are favorable for the banks and other financial institutes. Okay, so they anticipate a recovery of economy during that phase, and when the economy turns up, okay, when the economy turns up, investors usually rotate into the technology sector. So this sector is actually very sensitive. Okay, so because the businesses invest in new technology to make productive gains. Okay, uh, and after the growth pick up some momentum, okay, investors typically move into the consumer cyclic sector. This sector includes the hotel industry, automobile sector, and food and beverages and other non-essential items and discretionary items. Because with the growing confidence, they start spending on the discretionary items. I mean, the consumers start spending into the discretionary item. Okay, and after the consumer cyclic sector, investors generally rotate their money into the transportation and industrial and others, basically and basic material such as cement and other infra stocks. Okay, so because this is considered to be the midpoint of growth. Okay, and here the economy growth is a little bit smooth, so they invest in facilities such as transportation, infrastructure, and construction of industries. Okay, so after the growth matures, okay, investors typically rotate into the energy sector because these industries need energy to run. Okay, so they are dependent on each other because increased in demand because increased demand led to transport goods and led to construct buildings and every infrastructure. Okay, so okay, now when the economy transits from growth to a recession, okay, what will happen? Okay, so when the economy transits from growth to recession, investors may get defensive. Okay, and and they will start rotating their money into the less sensitive stocks. Okay, and they are also called defensive sectors because they protect investors during a downturn of economy. Okay, when considering a defensive sector, think about what kind of goods and services you would still buy during an economic downtrend. Okay, so most likely you will continue spending on your food, health, utilities, isn't so? So the first sector during a recession, investors usually rotate their money into the consumer staples. Okay, because people still need to eat, drink, and clean their houses during an economy downtrend. So basically, you cannot make excuses to your mother that mom, it is an economy downturn. You cannot clean the house. You have to clean the house, isn't so? Okay. So as the recession continues, okay, investors usually then rotate their money into the utility sector. Okay, because such as gas, water, and electricity, because these are some basic necessities of people. Okay, and they are willing to pay for these facilities. And after the recession get worse, okay, now it is somewhere around depression cycle. Okay, investors typically rotate their money into the healthcare sector. Okay, because they are obviously willing to pay for their health at all cost because they want to live. And towards the end of recession, okay, somewhere around recovery, investors then move their money from healthcare to the service sectors such as consultancies and all. Okay, and after rotating into the service sector, investors generally start over. They again invest in the financial sector. Okay, because after recovery comes growth. Clear? Now let's see how to identify stocks. Okay, so first thing you have to do is to check in which phase of economy is going on. Okay, and second thing you have to do is to check which sector is outperforming the rest of the sectors. Okay, and then you have to compare the sectorial index and the stocks of that particular index. Okay, so let's see some examples. Okay, let's take example of COVID-19 situation. Okay, during COVID, the entire economy was depressed. We all know that. And we can clearly see in the charts that the pharma sector is outperforming every sector. Okay, because it was a very worst situation. Okay, the economy was totally depressed. So people are willing to pay for their health. And you can see that the pharma is followed by the FMCG and consumption sector. Okay, so people are willing to pay for their health and for their food and utility sectors. Okay, so it would have been a wise decision to rotate money into these sectors during a COVID pandemic. Okay, so let's see some pharma stocks to get a better idea. Okay, so here was the COVID breakout. Okay, and we can clearly see that the stocks have relatively less sharp falls during the period. Okay, these are all pharma stocks, and we can clearly see a leader here, which is a purple color, and it is Lordus Lab. I don't know why the hell they use such hideous name. Anyway, so we can clearly see that it is outperforming its competition. Okay, So this is a leader stock. So let's look at the charts. So here's the chart of Laurus Lab, and here's the pharma, CNX Pharma. So we can clearly see that the pharma sector has a sharper fall compared to the stocks, the stocks fall. Okay, so this is relatively stronger. Okay, and after some time, when the pharma has recovered and was in a sideways consolidation, you can clearly see that it was in a rising stage. Okay, so here is the outperformance. Here is the outperformance of this sector. I mean, this is the outperforming stock. Okay, and remember when I told you that sometimes momentum led to underperformance. Okay, so here is a very good example. You can clearly see that the index, that the pharma index has less sharp fall, and here is a very huge sharp fall. See, so after a very massive move of somewhere around 300%, this stock has to retrace that much compared to its index. So this led to the underperformance. Okay. So this is a leader one. Let's look at a laggard one. Okay, so laggard one is here, the pink one, which is Zydus Well. So let's look at the charts. Okay, so this is Zydus Well, and we can clearly see that it is really volatile. The reason why it is a laggard is because this is really volatile. And remember, I told you that a less volatile stock will give you more returns compared to a highly volatile one. You see, this is in a clear uptrend. Okay, this is not that much volatile, so it has given a return of 322%, whereas this stock is really volatile. In the same amount of period from March 2020 to March 2021, it has only given a return of 33%, which is really bad. Okay, so it would be a wise decision to invest in leading stocks. Okay, so thank you for watching, and before concluding, I would like to suggest you that you can start watching price trends among the different sectors. Okay, because being aware of the sector rotation helps an momentum investor to rebalance their portfolio frequently. Okay, and sector rotation does take some time and experience to learn, because there is no hard and fast rule that after the financial sector the technology sector will do good. There might be some other sectors which will do good. Okay, because there's no hard and fast rule, it only comes with experience. So it would be good to see price trends, and it would be a very good idea also to go through at least one economic cycle and observe how investors rotate from one sector to the another one before making your own decisions. Okay, so thanks for watching and have a nice day.